Welcome back to Not Financial Advice. Today we're going to be taking a look at Palantir and its $17 stock. Thanks to a subscriber request, we're looking at Palantir today. And I'm pretty glad that we are because this is a stock that I have certainly written off. It's a stock with a seemingly eccentric CEO, a stock that participated in the euphoric 2021 um, bull market, a stock that more recently has been given some buoyancy due to the buzzword AI and the fact that this is certainly an AI company. And so, like I said, a company that I had written off, but I'm glad that we're taking a closer look at it today. And we're going to do just that right after this.
You need to diversify your bonds.
The only problem you're gonna have is that you didn't buy more. Because by the time you read about it in the Wall Street Journal, it's already too late.
Okay, today we're starting over here on Qualtrum, a suite of software that I pay for to look at stocks, but not one that I'm affiliated with. So I'll leave the link for Qualtrum in the description below. But before we can get started, like the video and please subscribe to the channel because today we're going to be learning a lot together. And this is a very interesting company to be looking at. So let's just jump right into it. Okay, today we're going to be starting off over here at Qualtrum. It's a software service I pay for to look at stocks, but not one I'm affiliated with. So I will leave the link for Qualtrum in the description below. But starting off, we can see some key metrics just to frame our view of this stock. So Palantir is a large cap technology growth company, a $39 billion market cap company with a forward PE of around 58, which seems high. But if there's enough growth in revenue and profit there, it could be justified. But what we can also see here are some things that are concerning. So they are producing free cash flow, but the CEO and the board are rating these profits, lining their pockets with these profits. Now, we are capitalists, obviously, and I don't think there's any shame in it. But it is at this time a matter of concern. But there are some promising signs that Palantir is starting to be a bit more focused on the interests of their shareholders as well. And so we're going to uncover those details additionally. Uh, Lastly, as far as the key metrics we need to look at here, Palantir is sitting on around $3 billion in cash. And this surprised me a little bit. So I went ahead and verified across other platforms. I think Wide Charts, Yahoo Finance, Wall Street Journal, several other platforms. I did verify that it seems as if Palantir currently has no long-term debt. So that's obviously an awesome thing when looking at an investment, as those debts can weigh down returns. So what we're going to do is we're going to move right over to our chart with Google. And we can see here the things that sort of initially informed my opinion about Palantir and its stock price. So as we're diving into this, I'll ask you to like the video and subscribe to the channel. And now what we're going to do is we're going to utilize this newer tool that Google has implemented when you do a simple search for a stock, where they sort of show key events interspersed within the price chart of the stock. If you look at the price chart for this stock, it's pretty interesting. So it IPO'd in late 2020, which was obviously an interesting time in the world. And it has had positive returns. It's had positive returns around 90% in the last 3 years, give or take. So really strong returns, somewhere in that 25-35% range a year. But as you can see here, from its IPO date until the fall of 2021, this stock was up 212%, as I mentioned, participating in that post-COVID market euphoria. And so this interspersed with sort of the appearance of the CEO had certainly led me to just sort of filter Palantir and its noise, out of the front part of my brain in looking at those things. But at the same time, there are some developments here that paint the picture of Palantir's story. And so let's run through them fast together, real quick. What we can see here is a month or so after IPO, Palantir closed up 21% on reports of a $44 million contract with the Food and Drug Administration, apparently. So that's interesting. I'm just learning this very second that they have some partnerships within the US government outside of the military, which is its main client. We're going to touch on that here really quickly. But additionally, we see that Kathy Wood, in classic fashion, bought Palantir stock near an all-time high, and earnings went, or the price rather, went up 11% that day. This was following strong earnings. From Kathy's investment point initially, she is down 31%. Good for her. I think she's buying more, so can't beat up on the lady too hard. But let's also see what else is going on. So, getting into the 2022 bear market right here, sort of in the middle of it, Palantir's profits did miss. A downbeat revenue forecast was given and sent shares tumbling 21% at that day. That would have been a good entry point. Since that point, the stock is up 106%. But looking here at early 2023, what we can see is that Palantir stock soared after reporting its first profitable quarter, up 21% that day. So a reversal from the previous news event. And so I I think in retrospect at the time in 2021 and 2022 and looking at this company, it was not profitable. It was by definition speculative. And that was part of what my, self-taught training in stocks and investing told me to do, was to just sort of sweep it to the side, save my prefrontal cortex for more attractive investments, or investments that were a little bit more time tested. But in the last year or so, the questions have been, and the story and news about Palantir has been more and more so about profitability. So, our last metric that we can see here is Palantir's shares surged after a strong quarter, beating estimates driven by AI demand, up another 20% that day. What does that mean? Okay, so let's figure out what's going on with this stock. And we're going to come over here and do a read through together of an article from Investors Business Daily. And so we found out a lot of really informative yet high level things, that can sort of help you to get a grasp on this seemingly intangible company. What is Palantir? What do they do? Oh, they do cloud and AI stuff, for like the government or whatever. And so that's not enough of an investing thesis for me. It was enough of an investing or a speculative concept for others. But today, as long term buy and hold value and fundamental based investors here on this channel, let's take a look at what Palantir does on a day to day business to bring in revenue and cash flow. And so we're going to go through this here together. Palantir stock hit a 52-week high on November 21st, but Palantir stock reversed after the size of a highly anticipated UK contract disappointed. So, additionally, investors recently focused on a US Army contract. And so that's something that caught my eye and started to have me feeling a little bit more open minded. But there is a process. There are panels and trials and requirements, and a non serious company likely wouldn't make it all the way to that point. of not only winning a contract with the Army, but seeing that contract extended. So this has a little bit more substance than I thought at first. And so as we continue reading our article here, what we see, Palantir has already mined the AI opportunity with government customers for intelligence gathering, counterterrorism, and military purposes. And so this is where the bulk of 60% of their revenue comes from, is from defense sectors, defense departments with Western governments. And I actually really, really like that. Um, I can say that you might not have a huge amount of future growth in that, but there's something that is, steady about having government, specifically military contracts here in the US, no matter what year it is. uh, the Defense Appropriation Act always seems to get passed. And so I think this gives a little bit of stability and predictability in this stock. And so definitely something that I like seeing. The software maker has also expanded into healthcare, energy, and manufacturing, not to mention the financial sector. And so these are some areas where we could see a lot of growth and something that makes me excited about this stock potentially. So looking at fundamentals on this stock, Investor Business Daily, company has announced a $1 billion buyback for Palantir shares. So that's huge. That is making this more of a potential future serious investment option for me. Buying back shares, treating shareholders the right way, something that I haven't seen as clearly over on Qualtrim, where we're about to do a deep dive on their balance sheet and other financial metrics and their performance over the last 5 or so years. So Palantir's governance structure gives the CEO and co-founder Peter Thiel, a very smart guy, long-term control of the company through super voting rights. Might sound bad, but the founders and CEOs, holding the majority of the voting shares in the company may put them in alignment with the betterment of the company. They're more directly rewarded, which may influence their decisions in selfish means to a place where they propel the company and the stock higher, benefiting shareholders. So just of note there. Additionally, so I thought that this was neat, and it explains, the appearance of the CEO, who frankly looks like Sam Bankman-Fried's uncle. And that was part of the problem for me, is how much do I trust a guy, a CEO who looks like SBF's uncle? I didn't. Not sure if I do, um, but this makes it make a little bit more sense with the guy's sort of wacky appearance. I think he's a nerd that got really, really rich, and that's actually not too unfamiliar of a story. Founders of Apple and Microsoft were that way. Not comparing the stock to those just yet by any means, but let's read what it has to say here. So the name of the company was developed from Palantiri, which are crystal balls like seeing stones from the Lord of the Rings. Uh, uh, and he has a Lord of the Rings hairdo, that's for sure. Uh, Palantir means one that sees from afar. Now that's sort of spooky, and that definitely ties in with their connection to the government's military and intelligence services. So, additionally, Palantir engineers often customize software for the needs of their customers. That extends the time to ramp up to digital transformation projects. So Palantir can win a contract, but it could take some while for that revenue to be generated, which makes just fine sense to me. So the Denver-based company offers three platforms. One is Palantir Gotham, used by government agencies, Palantir Metropolis for banks, and Palantir Foundry, used by corporate or industrial clients. And so 60% of Palantir's revenue is coming from government agencies. And so we want to see more growth than that, but certainly there is that application for AI in those spaces. And so We can also see here that in late 22, Palantir acquired ownership in some Japanese interest that surrounded an insurance firm in Japan, Sompo Holdings. So I like exposure to Japan. I think that's a good market. I think they have an orderly, productive society. So I guess the question is, you need to know what you own and why you own it. And so is they do AI stuff for the government and other places good enough? Maybe, maybe not. Maybe, maybe not. By default, if they're providing services for military and intelligence agencies, there will always be a shroud of secrets around exactly what it is that they're doing for these groups. But at the same time, we can see that Palantir has partnered with Microsoft, another promising sign showing them as not a non-serious company. But additionally, to speed up corporate adoption of AI software, Palantir and IBM have formed a global partnership where Palantir makes Foundry software available to IBM's cloud computing customers. Foundry platform is a centralized data operating system that lets users manage, filter, and visualize large data sets, sort of like we do over on Qualtrum. Like the video, subscribe to the channel, and now we're getting into the meat and potatoes of this company, and its stock and its price performance. So, at first glance, things are pretty ugly here. Let's start with revenue. So, revenue is going to be a check mark. Revenue on this company is up around 44% year on year. We do have 5 years of data shown here, so I'm not sure why it's not showing that 5 year return, but up 32% in the last 2 years and up around 44% on a year to year basis over the last five. We will be using that number. Or at least our opinion of that number and projecting forward for DCF, for our rough DCF, but growing at about 44% over the last 5 years. That rate won't continue forever. So keep that in mind and let's move forward. Moving forward, let's take a look at free cash flow. And so I was surprised to see this chart. And then I was immediately disappointed. So over here on Qualtrum, we have this really cool tool that shows us free cash flow in orange, but also stock-based compensation in purple or blue. And so what you can see here is that while this company has, had earnings per share or free cash flow, general gap profitability for, 3 years, that's what it looks like on the surface. But when you dig a little bit deeper, 320 million in free cash flow, 183, 475 million in free cash flow. That's great. But looking at stock-based compensation, this means that the CEO and the board are giving themselves payment in shares of their own company, in a sense, diluting the shareholder. And that's money that is taking away from free cash flow, in so many words. And so the real truth of the matter is that they have actually only been profitable for 1 year, to the tune of 447 million, um, because they are making sure that they are well taken care of, which I don't have a problem with, but this has to go in a different direction if it's an investment that I would consider. So I think what would be instructive here is I'm gonna rate this chart sort of with a neutral rating. Let's move over here to cash and debt for Palantir. So they have a cash pile that's growing from 1 billion to 2.6 billion, seemingly very little, if any, long-term debt. And so this will be a strong check mark from me moving forward. So let's additionally take a look at shares outstanding. So they're diluting the shareholder by issuing shares. They're probably that acquisition of that place in Japan might have been paid for in part with stock, and so don't love this. It's going to be an X mark. Now we're going to take a look at ratios. And so, as far as Palantir's ability to reinvest into itself profitably, that is not happening. So the trend is moving in the right direction, but this is probably very similar to how the chart looked for Amazon. Again, not comparing the two companies, but for the first 5 or 10 years, as the company is reinvesting in itself, oftentimes that doesn't initially bear fruit. So this is going to be an X, although it's moving in the right direction in the future, it could become a check. Looking at profit margin, they're just kind of hemorrhaging money all over the place. Another X. And lastly, when we look at relative PE valuation, the numbers are just all over the place, and it's really hard to make heads or tails of. So we will give that valuation metric no rating at this time and move forward to what I was wanting to show you. And so, there's always a lot of FOMO and people are buying IPOs. Um, and I think that you want to see a bare minimum of 5 years of financial metrics before you can really assess, how a company is doing and how they're likely to do in the future. Without 5 years of data, it's a little bit, it's speculation if you don't have a substantial enough amount of data. And so people want to get in early. And sometimes that works, more than often it doesn't. But when it does work, we have to learn a story, throughout history. And so, you know, um, even Warren Buffett had FOMO about Amazon. But he also taught a story about Walmart. And so, with this company IPOing just about 3 years ago, um, what we should think of is what an investment in Amazon would look like. If we invested on day one, we'd be up 170,000%. So that's pretty cool. So Amazon IPO'd in May 16th, 97. Going to about May 16th of 2007, if we had waited 10 years to invest in Amazon, even at this time, the profitability was still shaky. But if we had waited 10 years to invest in Amazon, yes, we would have missed out on that entire 170,000% return, which I'll admit sounds great. But waiting even 10 years after this company went public, you still have returns of 4,300%. And so there's never a rush to get into the right company. Do another example of this here. And so all time we can see Walmart. Walmart, it's up 12,800%. So IPO'd in 1983, December 30th. If instead of making that 12,000 that 13,000% return, we would only have an 1,100% return. And so that should sort of frame this discussion when we're talking about Palantir stock and its price versus value. So getting back over to Qualtrim, we can see Palantir is currently trading around $17 a share. Let's figure out what the fair value is on this stock together. So, as we are learning together what the fair value of this stock may be, I'm going to ask you to hit like on the video and subscribe to the channel. And let's break this down here. So, as I mentioned, there was 5 years of data, but we only have 1 year truly with positive free cash flow of $447 million. I do like to average 5 years of cash flow, and in this case, it's certainly not available. And so the reliability of this is a bit unclear. At the same time, I do anticipate seeing things move in the right direction. I do anticipate there will be higher free cash flow than this in the future. So we'll model that out as well. But cash lifted from Qualtrim, 2.6 billion, no long-term debt, this many shares. Remember, we saw that over the last 5 years, Palantir had grown around 44% a year. I've just gone ahead and done some research looking at analyst estimates and trends for the industry. And looking forward, I feel that over the next 5 years, the rate in which growth could be sustainable would be closer to 22.5%. In year 6 through 10, I've inputted a 15% growth rate with a 3% terminal multiple, a 10% discount rate. Palantir, $17 stock, value based on these conservative assumptions, $12, a $12 value on the $17 stock. Um, so with that in mind, let's just play with this a bit and let's see what could happen if they continue forward on their path to profitability. We can see without too much mental gymnastics, we can see where increasing their free cash flow by um, 40% or something like that would put this stock in line with its value. And so, with that being said, thank you so much for watching. If there's a video you'd like for me to do reviewing a stock of yours, just drop that ticker symbol in the comment below. And until next time, this is not financial advice. Thanks for stopping by. See you on the next one.